Hello and welcome to CMC Markets on Tuesday the 20th of August and the weekly market update. And it's been pretty much more of the same, fairly listless trading, lower equity markets. We do appear to be ratcheting lower. Obviously at forefront of most investors' minds are concerns about a Fed tapering program, seeing US and UK bond yields reach their highest levels since 2011. And rather perversely, the dollar is coming under pressure across the board. The euro is getting stronger, the pound is getting stronger. Now you can argue that the pound and the euro getting stronger are on the back of a slightly less bleak economic outlook. So as a result, we're seeing cable potentially head towards the top end of its recent range, could well touch 157.50. And we've got the euro dollar also pushing higher and testing that key moving average that I've been talking about in my blogs for the most part of the last few days, 134.10.20, which is a 200-week moving average. Now I'm going to look at the euro dollar because it does appear that we are going to, or we could well be getting, a break higher. And I think that's quite important given the fact that we've got the latest FOMC minutes coming up Wednesday evening. But more than that, we've got the latest manufacturing and services PMI data out of Germany and France. And that particular data could very well be important in the context of the GDP numbers that we saw out of France and Germany late last week, which showed a significant improvement. Now, we've had Wolfgang Schäuble on the wires this morning saying that he thinks that German GDP growth for the year will come in around about 0.5 to 0.7%, which is slightly above expectations. And I think that is more than anything what's caused the euro to pop higher. So I'm going to start with the euro dollar daily chart, which is now on the screen. And we can see the range highs with that horizontal line that I've drawn across the top of the chart, which comes in around about 134.30. We've traded above that today. And largely as a result, I think, of probably stop loss buying. Nevertheless, it's significant if we manage to close the week above the 134.20 area, because what that means is we can potentially go back to the highs that we saw earlier this year around about 137.50. And those are particularly highlighted when we actually look at the weekly chart, which is now on your screen. So looking at the weekly chart on your screen, you can see straight away at the beginning of this year, 137.50, 2013 highs. We can see that the market is trying to push above the downtrend line that I've drawn in there. We're now above that. And if we close above 134.10, then we could well see further euro gains and further dollar losses. But it's very much dependent on obviously what comes out of tomorrow's FOMC meeting minutes. And it's highly unlikely that we're going to see anything tangible. Maybe we could see some concern that Fed members have about the increase that we've seen in US bond yields. Since the beginning of May, the US 10-year has jumped from 1.62% to just below 2.9% now. Now, given the fact that we haven't as yet seen any tapering, that's quite a substantial move, given the fact the Fed is still pumping in $85 billion a month, and the likelihood is even if they do taper, they're still going to be pumping in between $65 and $75 billion a month in any case. So could this be a case of, sort of buy the rumour, sell the fact, or sell the rumour, buy the fact? It's very difficult to say, but what I would suggest is maybe this rise in treasury yields is slightly overstated. So we've talked an awful lot about the dollar weakness that we've seen in the lead up to these FOMC minutes, and obviously not to mention the Jackson Hole Symposium. I think if you're looking for any clues with respect to Jackson Hole, I think you'll be disappointed, simply because the key protagonists are not there. Mr. Carney, Mr. Draghi, Mr. Bernanke, neither of them are there. So I don't think it's going to be potentially the market moving event that it has been in past years. So to recap, we've seen dollar weakness in Eurodollar and cable. We could well see dollar strength, and thanks to a couple of my followers on Twitter for pointing this out to me, in dollar Canada. You know who you are. The chart that I'm showing you on the screen suggests that we could see further Canada weakness. And I think for further clues about that, keep an eye on Canada retail sales later this week and Canada CPI, because I think the potential for Canada CPI to come in weak on Friday could well drive further US dollar gains towards the top end of the recent range and that resistance at 104.30. If we break above 104.30, and that's the horizontal line across the top of the charts, we could well see further Canada weakness and further dollar gains. Another couple of key items to keep an eye out on later this week. We've got the reiteration of UK GDP, second quarter GDP. Potentially could see an upward revision there from 0.6 to 0.7%. We also have German Q2 GDP as well. So again, another potentially market moving event. As for this week, once again, thanks very much for listening. This is Michael Hewson talking to you from CMC Markets.